was sitting in my basement dreaming of a Lambo ride. Road dog crypto came around and took me on a wild tide. With his charts and trend lines, magic like a wizard in the night. I became a millionaire thinking it's a crazy ride. Up, down, sideways, oh my wallet's gone insane. Bitcoin to the moon, but then it falls like pouring rain. Little Doge went barking, I got rich in just one night. Crazy ride, this crypto, my portfolio's taking flight. Late night candle watching, got my eyes all red and sore. Holding through the FOMO, feeling richer than before. Thanks to Road Dog's voodoo, called Fibonacci lore. Crypto roller coaster got me begging for some more. Up, down, sideways, oh my wallet's gone insane. Bitcoin to the moon, but then it falls like pouring rain. Little Doge went barking, I got rich in just one night. Crazy ride, this crypto, my portfolio's taking flight. Lost a million, gained a billion on a Tuesday afternoon. Mama telling me I'm crazy, but I'm howling at the moon. Road dog taught me patience in this market full of gloom. Now I'm riding crypto waves like I'm rocking on a tune. Up, down, sideways, oh my wallet's gone insane. Bitcoin to the moon, but then it falls like pouring rain. Little Doge went barking, I got rich in just one night. Crazy ride, this crypto, my portfolio's taking flight.
In the digital realm where the pixels dance, I'm the trader, the player, the main chance. On the charts, I see the signs, the patterns, trend lines, candlesticks, the market's own tattoos. Highs and lows, the rhythm of the trade. Stay focused, don't let the noise invade. Technical analysis, my trusted guide. In the crypto
Check 1 2 1 2.
ride the tide. Crypto patterns, they come and go. Stay ahead, let the market flow. Buy the dip, sell the peak, don't hesitate. In the crypto market I navigate. MACD, RSI, the tools of my trade. Volume spikes where the profits are made. Bullish and bearish, the market's mood. Stay alert, the game is never subdued. Highs and lows, the rhythm of the trade. Stay focused, don't let the noise invade. Technical analysis, my trusted guide. In the crypto market I ride the tide. Crypto patterns, they come and go. Stay ahead, let the market flow. Buy the dip, sell the peak, don't hesitate. In the crypto market I navigate. In the chaos, I find the signal. In the noise, I see the details. With every trade, I grow and thrive. In the crypto market, I stay alive. Crypto patterns, they come and go. Stay ahead, let the market flow. Buy the dip, sell the peak, don't hesitate. In the crypto market, I navigate. In the digital realm, I'm the king. Trading patterns, my everything. Crypto patterns, they come
the crypto market I go. MACD, RSI, the tools of my trade. Volume spikes where the profits are made. Bullish and bearish, the market's mood. Stay alert, the game is never subdued. In the chaos, I find a signal. In the noise, I see the details. With every trade, I grow and thrive. In the crypto market, I stay alive. In the digital realm, I'm the king. Trading patterns, my everything. Crypto patterns, they come and go. In the crypto market, I glow. Yeah. Up all high, it's so real low. FOMO got me feeling hollow. Should've played road dog, tips on the go. My screen crack, dreams ain't slow. Crypto crashes left and right. Panic swipes in the dead of night. Checking stats till the morning light. Reality bites and it's not polite. Hustling a hunt, I can't deny. Spend my cheese, now it's bone dry. Laughing at my balance like a bad goodbye. Trial and error till the day I die. Ran after charts like a headless chicken. Lost coins and hope when things got stricken. Road dog's correct, more than he's clicking. Turns out memes ain't real thick bacon. Moonshots feeling far away. Hopes deferred to another day. Phones as busted as my display. Crypto life just says no way. Hustling a hunt, I can't deny. Spend my cheese.
Check, 1 2 1 2. We're almost ready. Just giving it a minute, let some other people trickle in. Wait till this song is over and we'll go ahead and get started. Got about 50 seconds left.
Moonshots feeling far away. Hopes deferred to another day. Phones as busted as my display. Crypto life just says no way. Hustling on, I can't deny. Spend my cheese, now it's bone dry. Laughing at my balance like a bag of pie. Trial and error till the day I die.
He woke up early to the crypto sunrise. Charts on the wall, yeah, calculator by the skies. Elliott waves everywhere, trying to see the light.
All right, we're ready.
Markets got him drowning.
5 people, let's go.
What a fight.
For those of you out there that have been hitting that like button, I just want to say thank you very much.
Welcome everybody to the 4th live stream of Chart School. In the previous ones, we went over some basic concepts. We went over support resistance lines, moved into trend lines, and even started talking about measure moves on the last one, how to take a trend line, measure move from a trend line. We're gonna, and also channels. That's kind of basically where we went to right now. We're just gonna do a quick little recap just in a few minutes. Support resistance is one of the first things that you should be looking for when you come to a chart, and it's always good to zoom out. I emphasize that when you start down a top-down analysis, it's a good idea to go to the weeklies and kind of get those guys. And maybe you could go in as far as the monthly. You can go as big as you want. Getting these levels, especially the candle bodies, they're going to be some very strong points of support. So those are some bigger ideas to look at. And you don't have to go through and get them all and get a whole chart full of them. You just need the ones around where you need something where it looks like price could fall to. So we don't have to go through and put one on every level or anything like that. We just got to be more concerned about where we are here. Now, there might be a little something here in between these two candles, so yeah, let's go with that. Let's go with that lowest one there. Now, sometimes I like to code these in some kind of way that I can recognize them. Maybe put them big and fat and some kind of, I don't know, weird color. I don't know. Maybe I'll go with white. Or a light white or a gray or something right there. Good idea to lock those little guys in. And so now we got a monthly level. Let's go with the top over here. Man, I want these big and fat. All right, so we got the monthly. Come down to the weekly and see what we got and see. Now, they don't match up as pretty on the weekly, do they? But that's the areas that they can really kind of come down to and touch there. You can put some other areas if you want to on here. But I like the monthly. You can go to candle wicks if you want, but and get the very tops kind of outlined. Those can be some ideas. You can use Alt H to get the horizontal lines, or Alt J will give you just this little ray right there. I think that's what it's called, a ray. It extends on forever. So that's kind of the basic overview concept. Now you can carry this down to the daily, get your other daily levels, things like that. This would be a almost little daily level here if I wanted to draw it, but then you end up with a lot of lines, and some people like that. The most important ones that I would say are the ones that are where you see lots of things touching, lots of candle bodies there. That makes a great one for a daily right here. I think I need to use a different color. I'll go with orange. And so these are areas that we should hold, and you always look to the left when you're doing this. And of course we didn't have anything there, but those are the areas. If we were over here looking at this area trying to figure it out as we're going up and we don't know what's happening there, we would be looking to the left over here to find these areas. And I really like, it's a little tricky, it takes a little while to get used to doing this, but the ones that they come down as support and then they're also resistance, and this kind of can be a fuzzy area. And so, you might have to change time frames if you're really trying to nail it. But in general, you can get those little fuzzy lines there. Like this would be a nice little support resistance area. And you look over here, and it's resistance here. We never did test it for support, but those are the ideas. I like those. Those are strong, and you'll see them have more play if it was support and then resistance, where they flip-flop. We do call it a support resistance flip. Those are really good strong ones to look for, and rather just try to label every little top that we got here or every little bottom with the trend line. And you can do that, and a lot of people do. Nothing wrong with that. That'll come into play. You just get your chart starts looking like this, and throw on everything else that you got, and you might not be able to see it. Let's see if we can undo that mess that I made there. So that's one of the first things you should be aware of, and at least be in the back of your mind when you're looking at them. And eventually you get to where you can kind of see some of this stuff without even actually drawing it. Now, the next concept that we talked about was the popular trend line, which, man, I think some people look at trend lines and they're, it's just a direction. I can see why direction price is going silly. I don't need to draw a trend line. And you can say that. And then some people, just might draw them through the middle or something like that. Well, there's a trend. It's that direction. Okay, you can look at it that way, but the proper use for trend lines, really, other than just to say the trend, is also support and resistance. Whereas this is horizontal support and resistance, we got diagonals, and they take on angles. And once you start diving down that rabbit hole, it gets kind of fascinating. Now, a lot of people will start doing the trend lines, and you might see people just only draw their bottom trend lines as they track things. You might see that. You might see them only play the top trend lines. And that's kosher. It's all got its place. But you notice with the trend lines, it keeps going on forever, and if price ever does come back down there, a lot of times there is a reaction there. When you start seeing them lift up like this, that's a sign of a parabolic move, which is what we got going on with Bitcoin. It doesn't feel like it right now, but it hasn't felt like it this whole ride up and all that stuff, because it's when you zoom out that you kind of see it. We're on a slow, gentle, curvaceous move to the upside on Bitcoin. We're going up. I know it feels like we're going back to 70,000, and some people are still saying that, but we're in a parabolic move, baby. We're in a parabolic move, and the trend lines can help you see that. Now, to establish a trend line, we did bring out some basic guidelines. You need at least 2 touches to be a trend line, preferably 3 or more. And the more touches you have, likely the more solid that trend line is, or, we'll get some kind of reaction in the future. So those are some things to consider. Now, when you have a trend line and you find an angle, when you zoom out like this, because we want to start zooming out. I recommend you do that on any kind of trend line, on any kind of pattern, which we're getting there shortly in just a few minutes. We're leading into it. I'll come and say hi to everybody in just a moment. I just got started and I got to get in my groove here first, or else I'll be a little squirrel chasing everything. Or a little dog chasing squirrels. But okay, so we got an angle. We want to establish, the main trend line that we're holding after it's matured, because we talked about this idea too, which is what I use this a lot in my trading too. You started out with a trend line and you follow it from the very start point. It'll lose it. It'll start maturing, and then when you lose it, it's time to get out, or something needs to be done. Whether you want to jump out of the trade or de-risk a little bit, whatever you need to do, put the stop loss. Stop losses go below trend lines really fine. I like that. We broke out of this one, and then we broke back into it, and that's usually bullish. Sometimes I'd be expecting a big old move. I usually am expecting a big old move to the upside from that, but we didn't get it. We went up, and then we broke it again. Okay, so from that one, we also got this one connecting from this same bottom that we had, following that one, and now watch how that goes. See that? Well, now we get to do it all over again. We follow this trend line. We got a place and tells us, hey man, we need to think about doing something. It normally, especially in your bear market, you'd expect price to drop. The fact that it went sideways and then went up, that's bullish, but what's it looking for? We can still track this as it gives us a new trend line there. Still tracking it. Might even go over one more tick there, but whether you do or not, this line is it's acting as resistance over here. It doesn't have a clear touch there, but that's what if they come up, it's usually going to do. They'll bump into it and you're making a higher, sometimes make a little bit of a higher high. Sometimes it's just an M top. You see that happen a lot when you break a trend line like that. But yeah, just keep on tracking as you got it. You can see where the candles right here respect the angle. That's what's so beautiful about it. These candles respect the angle right here. And right here was a place to get out. And then you see it doing something else. Okay, so I'm not saying this on the top lines. We could read the top lines. Those tell you places to get in, right? This is just talking about trend lines or breakouts. We're looking for breakouts. And that could have been an entry. It was a lackluster one. Even this one, we draw at the top, extended on out. It still got play, right? Go from candle bodies to candle bodies. Look, it respected that. Broke through it here a little bit, wicks. They can do that. It's a sign of weakness on the trend line, but you already broke it once before, so what's the matter? It does matter, but yeah, see what we're doing here? So we're extending these trend lines and we're just following them, tracking them. This one's going to mature a little bit, so we're going to track it down this way. Go to candle bodies. We would have first seen this one, and this is kind of what we would have got. And it's got some relevance. This actually turned into an internal trend line. That's where they float around on both sides and they convert a trend line into support resistance. You just keep going with it. Now, a thing about the channel or the trend line is once you get the established trend line, you can always check and go with the angles. I'm really big on the angles. I didn't used to be until I started studying more of WD Gann, and then just opened up a lot of stuff. So you guys get privy to a little shortcut there, because otherwise you might not look at this stuff or consider this stuff and for years down the road on your trading journey. So I just want to go ahead and just throw a little extra in there when you're first learning, just to give you an idea, a heads up, and be an edge. It'll give you a little edge above some of the other traders. That's the way I look at it. So my whole point in this was to show you about the channels. We just kind of zoomed in there. This was, remember this guy? Not that guy, but The first one that we had there, the bigger one, yeah. Well, we got one touch here, one touch area, two touch, three touch, basically 3 touch areas. Does that one need to touch? We got at least 2 main touch areas. Now the rule is to have candle touches, but you know, when we zoom out and kind of doing this, I just look at the varying areas. So as long as we got 2 of them, we're good. But we bring this guy up there, and we're going to just park him right on the top candle bodies. And I know it doesn't seem like it does much of anything. You can also line it up as best you can. Now, there might be some things like bear traps. So look and see if you got more touches over here. If it's just a little bit below, then go ahead and cut through those a little bit. You can finagle and see how it works out. And we look up here, and wow, look, it was a channel. Price travels in a channel. That's what I've learned from the OGs. I didn't want to believe it at first. I'm like, y'all just whatever. It doesn't matter. But when you understand that and you can project the channel, well, when you're down here looking at price, if you don't looking at that, you wouldn't know that it might get caught up on the top of that channel. That's an easy way to follow price action, top of the channel, and then you've got a target. Another thing about channels is what we talked about, a measured move for a channel, and it gets into patterns and everything else we're getting into. Channel is one of the first patterns that we're going to learn, right? Well, it is here. And you put the measured move from the breakout, and what happened? What happened? Didn't get it there, but did touch it here. So if you were doing a trade setup, oh, well, that's for short. One of these days I'll get this all right. If you were doing a trade setup using this method, this simple little method, set your little stop losses. You got a 4-to-1 risk ratio with a 6% stop loss. And it would have got up. Is that right? 24%. That's odd for Bitcoin. That was back when it was cheaper, though. It went from bouncing off of retesting this. It went up and then it came back and retested. You could have bought back in if it didn't come back in. We'll get to that in a second. But let's say entering here at the breakout when it doesn't. Or even front run before if you're DGen, but that can, you know, some of those times you'll get your asses handed to you trying to front run these things and not waiting for confirmations. Just got to say that. I mean, I front run stuff too, and sometimes I have to. Oh, where's my ass? Somebody hand me my ass. I lost my ass. Oh, thank you for finding my ass, and put it back on, and have to start all over again. That's impressive. You don't see that much anymore. 24% gains out of Bitcoin with 5%. That's actually a good one. And so she came up, nailed that target from the measured move, and then she came back, retested, and went on. Like, that's what they're supposed to do in a bullish scenario. This is a bearish pattern, by the way. Rising channels and most rising type patterns going up and to the right, technically they're bearish. They should break down to the downside. When they don't, we usually get a big parabolic move, a big strong move, and I try to point that out on my channel. That's one of the coolest things I think I learned from one of my mentors, who I don't think is any longer with us anymore, but Crypto Bitcoin Chris. That's one of the things I learned from him in his trading group on his late night, on his screen shares. It's kind of like what I do here. The bulk of what I learned and put together, a lot of it, what started making sense was watching his weekly screen shares, man. And it's just him. It's just like his little videos that you get, but you get his mindset and him just kind of explaining things and what he's looking at, and just some ideas, and start talking about little things like divergence, little pieces here and there, and you start seeing how these pieces fit together in the market and how we look at them, and then that is and then things start to click. Things will start to click. And that's one of the values I got out of his screen share. So my streams and everything, I try to do kind of like what he did, in a way of just going through the mindset and talking about things. But that's the idea. So, okay, we went over support and resistance. We recapped the idea of trend lines. And now, we mentioned what makes a valid trend line. You need at least 2 touches, at least 2, preferably 3. And now we're going to take this trend line ideas and we're going to apply it to let it review the pattern. Now, we want to find the patterns, unveil the patterns. We do not want to force the patterns. There's a difference there. When you zoom out and you just put the lines where they go, just lightly let them fall where they may. you get the picture, you get the perimeter, you get the outside, you get to see what's going on. It's when you try to make things into something that maybe they're not, enforce things and bend the rules and all that things, and things are twisted too much. And I mean, it kind of looks like that, like a shoulder head, and this is a shoulder. Look, and here's your neckline for this shoulder, head and shoulder to the upside. It went to, that's forcing patterns, and that's not even valid. Even though, but you couldn't tell them because, well, look, here's the shoulder and here's the head and here's the other shoulder. That breaks the guidelines, the identifying guidelines for this pattern. You're making up your own rules now, but you can't tell them difference because, oh, well, this happened to break up to the upside. Well, I mean, that was indicated over here, breaking out this bearish pattern and retesting it. That's where that upside came from. That was your signal. Or one of the many signals. There's different ways, but you'll always find that, some people will be drawing maybe a pattern that you didn't draw. Look, I got this channel, but this falling wedge right here, valid, totally valid, 72%, 68% chance to break to the upside. That is accurate right there. Guys, let me come over to the chat and see what you guys are saying, if there's any kind of questions or any kind of things, because it's important for me to tune into you guys. This is for you guys, and some of this stuff you already know, and some of it might be new to some of you, but some of the people just coming in, paying it, you just joining the channel, they may be new to this, so I want to keep those in mind when I'm going over this. That's why I want to do my recaps, and it gets me into the zone here. Shout out to everybody who's here. We got Glasshopper77. We got Joe from Trade Intuition. How's it going, Joe? Joe's a fellow YouTuber. Go check him out. He teaches too. He's not here to learn. He's just here for support and just to hang out. And he's got a wealth of knowledge over there. Joe, check your DM. I sent you some music, bubby. Did I say bubby? What does bubby mean? Who said bubby? Who says bubby? What that? Buddy? Buddy? Put some bass in your voice. Buddy? All right, we're having fun. We got Keith and Chief. Sounds good. Professor Turkey. Hey, cool. Glad to have you guys here, man. I get preoccupied with how close my trend line is to the candles and if that affects accuracy. Oh, I like them touching my candles. I want them touching my candles. I want them touching the candle bodies. That's where I found that you get the most accurate information, and especially the angles. Now, okay. Let me tell you this about candle bodies and why they're important. And one reason why I'll explain why I prefer the candle bodies for trend lines too. A lot of your indicators that we use, like the RSI and all this other stuff, they are calculated on not candle wicks, but candle body closes. Whether it's a good close or a bad close, your RSI is calculated on that. And so if you're going to do your divergences with RSI, I see a lot of people take them from wicks to wicks, and they see a divergence where I wouldn't see one by my rules with candle bodies. And they wonder why it didn't work out. All this divergence sucks. It don't work. Well, it depends on how you're doing it, because if you're taking it from wicks to wicks, that's not what the RSI is calculating on. So your divergence is not really accurate, is it? If the RSI based it on the wicks, it would be accurate, but it doesn't. And that's something that maybe newbies don't know when they come in this market. I mean, unless you're told that right off and explained to you, you just go and read something, a paragraph on divergence, and think you got it. And that's the state of where we are. The more time you spend studying technical analysis, I mean, it's weird. I never would have thought I would be a chart junkie. If I was in high school, college, or wherever, even in my adult life, I've never thought, man, charts are so sexy. I can't wait I can just stare at them all day. Dude, I mean, it floored me that I avoided this so much. I was like, ain't no way I'm gonna. I'll see the price. All these wine lines and voodoo stuff. That stuff is complicated, and I don't have my college. I don't want to learn finance and all that boring. You don't have to, man. All you got to do is just pretend you're Bob Ross and draw some happy little lines to give you a happy little guide. They're just guidelines. Here we are. I'm going candle bodies to candle bodies on Bitcoin, and it tells me we got some places we could fall. We don't want to see that, though. There's also some other ideas. Remember that channel thing we just talked about? Yeah, we got a channel idea right there, too. Now, look at that idea. Oh, we did fall, and we bounced off the top of that channel. Trend lines. They're helpful. They're helpful. They're helpful. All right, so now we've recapped pretty much back up to channels. Now we're going to start looking at some other stuff. What else do you got besides channels, Road Dog? You keep talking about channels. Well, we go back to our faithful trend line on whatever chart. I want to mix it up. Let's mix it up, shall we? So we got this. We're just tracking this little guy along as he, we don't see what it's doing parabolic, and we're getting all excited and whatnot. Chasing the trend line, and she's going up here, up here, up here. Can I do a replay on this one? Can I? How does that work? Oh, it's not available. Okay. All right. So we lost it and whatever. So trend lines, and we lost our trend line. Okay. And then it starts going down here, right? Well, so far we just been tracking this, and we're on the bigger time frame. You can go down to smaller time frames. You can find all the patterns you want, baby. They just keep repeating over and over. But we draw a trend line. We got to 1, 2, 3. We got lots of touches on that one side there, and we'll see what we got on the other. And now, the first thing I'm going to do is I'm going to look for a channel. I've just learned to do that. That's just what I do anymore. But what I used to do, and there's nothing wrong with it because it's still valid, it's just part of that channel, and it's called a falling wedge. 68% chance that these guys break up to the upside. They're pretty yummy. One of the things that you might want to look for, especially on the bigger time frames of this falling wedge, is connect your bottom candles here, and now see the direction that they go down. And we're getting into something advanced here, and it's kind of hard to wrap your head around, but we're going to talk about it anyway. See how that goes down. I want to check for divergence. I want to see if my RSI is still doing the same thing. A lot of times, if you see where you got some form of divergence hidden, preferably the regular kind, which we will show. Oh crap. I don't think we got it, actually. Let's see, where are we at right here? Let me draw a vertical line because I got to pull up my RSI. Oh, there we are. Okay. And so that was the peak here. It goes down. It does go down. Does this one go down too? They both go down. So there's no divergence. If they're both going in the same direction, well, they're going in the same direction. It's when they go in different directions, that's where the divergence happens. Okay? And what I was hoping to see there was that price is going in down, and hopefully that the RSI would just tilt it up. And that would be, sometimes I have to go through this in my head. The one on your price action would be the first one, and the other one, the one below it, also went down. So there's no divergence. However, if it went up, and then we would have this little sign here, it would look like this. If we took it from the bottom and put it up, we would have that little, is that a greater than or less than sign? Jeez, I think that's a greater than sign. Let's still get those. That's the fishy eating this bigger number is what it is. That's how I remember it. That would be the strong bullish type of divergence. We don't have that. It didn't matter though. I mean, it would have been great. That would have been a bonus. That would have been like, I want in on this. If I see that, I want in. I'll probably jump in bottoms. But we got the breakout, and that's what we're looking for. When you get a pattern, you're looking for a breakout of that top trend line, just like what we were talking about before we ever got into patterns. But this pattern does tell us the way that it's squeezing down like that. And really all it is just in a bigger channel. It's the channel being squeezed. And when price squeezes like that, there's something getting ready to happen there. Let's see, do we have a lot of people look at volume for things like that too. They look for descending volume through here and then a spike of volume when you get a breakout. Traditionally, I mean, that's a rule of thumb to go by. The general rule is that if you don't have that big volume breakout, then it's probably going to be a lackluster breakout. It could just be a market maker play just to entice you, They just pull back on the orders and get people to kind of chase it up a little bit, and then they slam it down. I'm like, thank you for filling our bags. That's what they like to do. That's how they get the prices to go up. They just keep raising their orders up, just keep raising them up, and then they kind of push it up from the bottom a little bit. They start putting them orders in underneath the other orders, and people are like, well, man, they're buying like 50,000 of these coins over here. I guess I got to go, a few cents higher or a few dollars higher, and so I can get my order in. And that's how the prices keep going up there. They entice it all. That's what the market makers do. But here we had volume behind that, so people were chasing that breakout. They liked it. Came back to the retest, because that's what you usually see. You can probably see this better on smaller time frames. Oh crap, we lost it. I hate when that happens. Did we lose it did I? What? Oh, here we are. Jeez. What the heck? I was trying to go to a smaller time frame, because you can see the details a little bit better. So if you plan out, what I try to teach is try to plan out your zoom out to find your patterns, zoom in to play them. And you can find other patterns within it if you want to get all that nitpicky and all that. You can. It's okay. All right, this is not working out for me to do it this way. Here we go. At least I got down to the 12 hour. We can see it a little bit better. Yeah, we can see it really good here. Better. All right, so for a pattern, whether you want to look at it as a channel, it is a channel as a pattern, or the falling wedge where it's squeezing in, that is fine. That is fine. You just get a breakout, and a lot of these patterns have a percentage for a retest. Now, the wedges, the triangles, they all have something around the 64% chance to come back and retest that. Now, sometimes it could be immediate. Sometimes it breaks out like this, and then, down the road, they'll come back and retest, and you're like, oh, geez, really? Of all times, you want to come back and retest now? I mean, seriously, get back all the gains? What the hell are you doing? I mean, you can get emotional like that if you don't know. If you don't know the possibility that it could do that, it might be a surprise. It is for a lot of people, because I don't think their pattern teachers are telling them about those retest ideas. I didn't really learn about those percentages until I stumbled onto Thomas Bukowski, which, by the way, over here at thepatternSite.com, or one of his many books, he wrote the book on the Encyclopedia of Chart Pattern. The man knows what he's talking about. All that information is available on thepatternSite.com. I keep mentioning that, but this is where you get your golden proven, back-tested, nerd-approved, computer software engineered dude. He's putting out trading software. He's the dude, man. I mean, he's the number cruncher guy. I mean, you got other people out there. I'm about the math. I'm the math guy. And, they're not you. If you know math people, you know the people that are calling themselves math guys on YouTube. They're not really math guys. They're just like, they're kind of like, well, let's wing it and see what happens kind of guys. Bukowski's not that. He's cold calculated. He's got that engineer. He was an engineer. And if you've been around engineers, which I went to engineering school, I'm not an engineer. I had to speak to them and translate their words into English. Anyway, man, they'll throw you for a loop. Translate an engineer. That's fun and boring work right there. Now we got AI. Ooh, there with that job opportunity. Thank you, college degree. We got on a tangent and I got lost. That happens all the time. It's so hard to be a turkey in today's world, especially with bird flu going around. I'm just saying. All right, so Thomas Bukowski, that's where you can find solid information on how these patterns should play out. I recommend you to go there and place more value on what he says than what I say. I could be regurgitating it wrong. Sometimes the wrong words come out of my mouth. Sometimes I say bullish when I'm embarrassed. Sometimes I say, I don't know, I use the opposite word sometimes. I catch it on, I'm like, if I watch my stream over again, sometimes I'll catch myself doing that. So, have a good source, a good traditional source. Those traditional sources have the alpha. All the newbies are just repackaging it in a new kind of way. All right, so the patterns, now that we can start talking about patterns, what's the rule? For a pattern, we need at least 2 touches on one side, 3 on the other. No matter if your neighbor's got a different pattern, if he's got 2 touches on one side and 3 on the other, he's got a valid pattern. Your other next door neighbor might have a totally different, see this thing in a totally different way, but as long as he's got 2 touches on one side and 3 on the other, he's got a valid pattern idea. That's how this works. So you can't be looking, oh man, I'm watching this YouTuber and he's got a different pattern than what I got. I think he's wrong. Or maybe I'm wrong and he's right and I need to check. No, man, if you've got 2 touches on one side, 3 on the other, you're good. You can also look for other patterns. We look for patterns all the times. I look them from coming right-handed side, coming down. I look from going the other way too. They're all in there. There's all kinds of them. Here was another one. It was kind of tricky because you had to, it's more of a channel. It really is more of a channel. And as they develop, you just keep checking and checking, and sometimes they might change and develop a little bit. I mean, you've been looking at this one as this, and that was valid too. It was a falling wedge, broke out, came back in because that sucks. And then it just kind of, well, then it revealed its channel, right? Break out of that channel, retested that channel idea. That's why channels are important, because if you were playing the falling wedge, you'd be like, what the hell happened? What kind is? Here's where you start forcing patterns, and well, this is we don't force patterns. We just zoom out and we just let the lines fall onto them. Just let them get the starting point and let it fall onto it. Just let it fall. Let it be. Let it reveal itself. Let it reveal itself. Let's go through here. And this is something that you can do on the 1 minute is what I'm doing right here, just to kind of practice your ideas. That's great. We might do that here in a second. I do it a lot in my little crypto bowl game thing that I got. Just we follow trend lines, get a more mature trend line, start tracking it, get to that little wick sometimes because they'll test your patience there. But it's when you lose it, when you finally get your one established, and you see what she's doing, she's squeezing, she's making a rising wedgie. Broke to the downside, broke the trend line anyway, but it continued bullish, and that's annoying as F, especially when you just come out of a bear market and everything just is always falling, and then you start seeing them chase, and they're like, oh no, I missed it, it's going to the moon. No. It's just turning this into a support resistance flip in the diagonal kind of way. It was still resistance, and eventually that resistance caught up to it. You can still just keep on adding, keep your main pivot point. That's a technique that you can do. Now you've only got two touches there, 2 touch areas there, and it kind of changes things. You could even develop these ideas. That's fine. Or you could just keep watching the channel that you had before. That idea, that's fine. These bearish retest probably going down, right? You start looking for a top trend line after that, right? So broke down. Now, if you want to take you can take measure moves. Every pattern has a measure move. And that's where it gets kind of weird here on YouTube because, wow, people are taking lots of liberties with those measure moves, using kind of intermingling some techniques there. I don't know if they realize it or not. But I mean, your basic measure move, even from a channel, would be this. Put it to the breakout, says we come down here, and we didn't on that. We came close on the first time, didn't quite nail it. Eventually she came up and then went down even lower. So you suck, old dog, I didn't measure. Well, that's what you got for a channel. You can do the falling wedgie, but you got the same idea, other than unless you listen to Thomas Bukowski, then he tells you to take the whole move and you use a multiplier. It gets a little tricky doing that. I use the Fibonacci to help me do it. It's basically 62%, so it's like going from 0 to that 618. Put it there. Did it hit? Hell no, it didn't even hit there. So your measure moves can get you into the ballpark, but and a lot of times if you do take care with them, I mean, they can be spot on. I mean, it'll be very, very spot on. But they don't always hit. That's why you see me going more with fibs. That's why you see me going with fibs. I'm just saying, the magic's in the fibs to me anymore. But measure moves are still awesome, and I still use them. But I do put a little bit more. I think my fibs are more accurate than your typical measure move. All right, so trend line, we follow it around, and then we find its other side. We find it. There, we got the touches now, right? We probably got a channel idea. Look how well the angles happen. Broke out of it, and broke back in it, and then lost it. That was sad right there. Well, this, my friends, is a top pattern right here. And we talked about, okay, we need to discuss the kinds of patterns that you have. I got basically 3 kinds of patterns. I got your toppy top patterns, which could be some of the most common ones are going to be the M top, double tops. You'll hear them called. They can come in many forms. They can have a sharp point and kind of round over. That's called an inverted Adam and Eve. You can have the pointies, which is an inverted Adam and Adam. You could technically have a double. What is that's like a set of boobies at the beach. Very perky. Eve and Eve top patterns. Same things apply if you flip them upside down, they become the bottom pattern. So once you know a top pattern or a top reversal pattern or a bottom reversal pattern, you know the bottom one. So you don't have to learn anything new. They're the same thing. They're just flipped upside down. Just flipped upside down. Adam and Eve, Adam and Steve, Eve and Eve, any very Eve and Adam. I mean, it's basically they just make it some kind of M, and they're one of the most basic patterns. Your W patterns, what a lot of your Forex people call them. And the premise is you got a neckline, and it's a horizontal level, and it's not confirmed until you break above that. When you break above it, then this pattern is confirmed. Until then, it's just a possible pattern. And the technical play, the technical plays on patterns is to buy the breakout. But then you got this other school of thought, like the degens like me, they're like the bottom of trend line. So I try to nail these, or if if I got a bottom trend line, I'm doing on a falling wedgie or some channel. I'm looking at these bottom areas to kind of nibble in. Does that make sense? So you can use patterns and trend lines to your benefit, trying to buy along the bottom of a pattern, or the breakout. And now you wait for a candle confirmation. Wait for a candle confirmation above that to be safe, and even then you're not totally safe because it could easily come back in the pattern and just ruin all your dreams. That's the risk that we're taking. But doing it that way, you would set a stop loss below the trend line, which could get flushed out. They like to do that a lot. A lot of pattern breakout traders get frustrated because they get stopped out all the time. That's when they start looking for alternatives. Like, I'm gonna start buying the bottoms instead of buying the tops. I'm tired of getting stopped out. That's what got me doing it. I'm tired of getting stopped out. But that's what you learn as a pattern trader. You first learn to buy the breakout. Now today, over in the chart area over here, I posted a lot of pattern references over there, if I can find them. If you ever get where you can't find them, you can go. Is it here? You can go to the student chart thing, right? That bar right there that says it. You hit that, and then it shows you the files and photos. You go there, and then it pulls up everything, all the little cheat sheets and all that. You pull up files, and you'll see the books that are available and everything else. But that's an easy way to navigate instead of having to scroll and look for things over there. But I posted all these over here, and they go over some of these concepts. So we'll probably take a look at some of these right now. Let's look at. So do I not have one of just bottom patterns? I was trying to do that before the stream, and I didn't. This one goes over some. Are you not going to? Did I lock up? Oh, okay, we're good. I thought my computer locked up or something. All right, so look. This one's actually a good one to go over. Let's go over this. This has got some good stuff right here. So on the bottom left, let's just start from the bottom over here. Bottom left, right beside my little turkey face. That shows a bullish trend. It's higher highs and higher lows. This is your basic stuff. This is great stuff. It falls right into where we are. By the next time, we'll be even going over the more advanced stuff. Bearish trends, lower highs, lower lows. Exactly what it looked like. Those little lightning bolt things. This is your trend change. Your trend changes when you stop making that higher high, you make a higher low. You stop, you don't make a higher high, you make a lower high. That's your first sign that your trend is over. That's when you start checking for your trend lines. It's probably you're seeing a break there or going to. Or you might be coming right around the corner. It may have already happened though. It may have broke it on the low and then came up and broke back in, it could do anything. But that's when your first signs and your trend lines will help you identify that. It's the breakout. That's where your breakouts come from. It's the change of trend. That's what we're looking for. We're looking for a confirmed trend change. The price is coming down to jump in. All right, so some of the patterns, let's go over here to the top. Now, these are some top patterns over here, the double top that we talked about. And then you got things like the head and shoulders that have 3. So you either have 3 tops or two points where they top a lot. Sometimes you might just have one. It just spikes up and then spikes down. That was like the parabola just ended. Most times you'll get a pattern forming there. And double top can form, double bottoms, the M's and the W's, and then you get the head and shoulders, or sometimes the triple tops. Sometimes it will be a little shoulder head and a smaller shoulder. Sometimes they'll all come up around the same area. So you got those ideas, and then you got in the middle here, and even down here with the falling wedges. You got the wedges, the channels, and channels can be ascending or descending or horizontal. And ironically, if everything fits into a channel, that's what I keep saying. The double bottoms will fit into a channel. The head and shoulders fit into a channel. You can get your bottoms with a channel. There'll be a channel because usually when you bottom out, you're ranging. And that's Wyckoff theory right there, where you range in a channel. Those ideas. And then you got your triangles over here, which is nothing but a channel that's just being squeezed. It's just a channel that's being squeezed. Descending triangle, ascending triangle, symmetrical triangle. Okay, so here we go. Now, these are continuation patterns. I would call these reversals, but they're calling them. Okay, well, I'll ride with you on this. Okay. So your triangles are usually your continuation patterns. And ascending track. And what's so cool about this one? This one shows you where to enter on the breakout and where to set your stop loss below the bottom trend line of the pattern, and then your take profit. You take your measure move and set your take profit. But it kind of shows you the setup on how you do that, a general idea. It doesn't show you how to take the measure move, but at least you see how to get in. You would get down the breakout. Now I'm looking now at getting in where you would put your stop losses. That's how I usually try to play something if I'm looking for it. I front run. Well, then I can set my stop loss below it. So, I mean, I'm just telling you, that's just what I've come to do. I don't buy breakouts anymore unless I've already missed my opportunity there. And it's just like, well, I'm not going to get in unless I do buy the breakout. I'll do that, but I try to avoid buying the breakout because they get faked out a lot. That's one of the first complaints you'll have for a pattern trader. I just getting stopped out. Well, okay, let's change our strategy to enter then. But the pattern's still true. They still play out. You can't say patterns suck. They work. They just do. I mean, and it's based on channel squeezing and measure moves. And I mean, everything's based on a measure move. All right, so continuation patterns are all your triangles are going to be continuation. So if price comes in from the bottom, it should exit out the top. In most cases, that's what we're looking for. They usually have good percentages to do that. And that's where I don't have the thing to show up here because I'm in the wrong room. We'll probably have to go back to the Telegram group to do that. And they're bearish if the price comes from the top. So ascending triangles are the same thing as descending triangles. They're just flipped upside down. Bullish wedges, the same thing as bearish wedges, flipped upside down, and price is coming in from the top instead of the bottom. Those ideas. And now these are talking about some of the bottom patterns we just talked about. This is a nice little triple top idea. Inverse head and shoulders, double top, and the things that we talked about there. I don't know why they're saying bullish continuation over here, but they are. But those are some of the ideas. Those are some of the basic, just knowing those, this will get you through the market. I'm serious. You don't have to know all the little stuff going in between. Technically, you don't even have to know the head and shoulders. Just know the channels and you would get the head and shoulders and double tops. I'm just saying. Channels and triangles. You can nail this market. You just need that. I was told that before I ever learned TA, and even when I was dabbling with just kind of picking up a few pounds, I'm like, nah, it can't be that easy. It is that easy. Here we go. This is great. Now this is a nice one. It goes over that and it kind of breaks it down a little bit more. All this stuff is available over in the chart room. I just put it over there today. You can find it on Google too. All this stuff is free everywhere, even in your paid groups. They're getting the stuff free on the internet. I'm just telling you, if you dig around, you just get your right sources to study, and then you're set to go. But you got to put in the work and study. That's the thing. You got to learn this, and experience will be your guide and be your teacher. All right, let me come over to the chat. the chat, make sure I'm not missing anything. Joe says, I love it. Don't force patterns. Never force a pattern. Then there's too much of that going on. That's why you see cup and handles, everybody claiming a cup and handle. And that's a pet peeve of mine. It really is. Do you remember do you remember this? That's your trend, higher highs and higher lows. And what you see people doing, wanting to be the man or whatever. Look, it's an ascending cup and handle to the upside. It's a higher high and higher low, dude. Just pay the higher high and higher low. Just play the freaking channel and you might actually freaking win something. But a lot of times when it's not, if you don't go by the guidelines for the things, and cup and handles are the biggest ones. That's one of my biggest pet peeves. It really is. I used to love the pattern because if you really identify one when they fit the description, you've got a good chance of it playing out, right? And basically that's what it is. You got price action in here. Doing a lot of price action, doing this little zigzaggy stuff or whatever, and it can, and you want some that are kind of roundy. But did I do that a whole different color? I was trying to keep that a different color. Oh, you suck. Wait a minute, let me go back and you be yellow and you be red. Yeah, that's what I was trying to do. But you got rules, you got guidelines, and you see a lot of these little gurus that I don't think they really learned a whole lot of pattern drawing. I think they just looked at the pictures and then drew up their own conclusions a lot of times the way that they do it. But ideally, they will be... Can we get that? For the cup and handle is a big one, and it's another one that you can play a channel on. I'm just saying, if it's set up right, it'll be a channel with your cup and handle. I say that a lot. You got a top and you got a bottom. There's a channel. Measure move for a channel, same thing that you would get for a true cup and handle. All right. So this is the cup and handy, and the guidelines. If you deal them, this handle can only come back so far, about 2/3 of the way. Basically, you could say to the 618 Fibonacci if you pulled a Fibonacci, if you like doing that, but basically 2/3 of a way, and anything more than that is no longer a cup and handle. It's invalidated. And I can't tell you how many times there's cup and handle to the upside, and they're not even leveled out. They're usually the crooked ones like this. Well, by gosh, wouldn't you know, that's when the channel just gave up his ghost when that one broke down. But no, and they're still saying, look, even when the prices come here, they're still saying cup and handle the upside. Y'all, what you get to get is some kind of double bottom situation there, buddy, or worse, maybe it breaks on down. Cup and handy. So the thing about cup and handles that are not specified, that I will specify, Bukowski specifies, it's a continuation pattern. It's not a bottom pattern. You're looking at a different animal. If price is coming in from here, you're looking at a scallop, and it may flag out and go up. It might, or it might come down and do the double bottom situation that we just talked about. Cup and handles are continuation patterns, so you want price to be going up into them. And if you don't see that, well, it's probably not going to continue to the upside. And that's the rule that is totally overlooked. The ascending cup and handle, we just talked about that again. But a lot of these are the same people that's always saying finding shoulder, head, and shoulders in all these weird ass places, and I just, to me, that just looks confusing as hell for somebody trying to figure. Well, that does look. Look, there's a shoulder, head, and shoulder here. And this one's kind of. Look at that. Yeah, you get that a lot. The inverted head and the top patterns played, bottom pattern, reversal patterns played as a top. I mean, you might have got a measure move to the breakout, but that's not a reversal, is it? You're lucky you got up here and came that, man. In my personal opinion. This is some of those ideas. All right, so let me zoom out. So I really think channels are your friend, but always. Now, if I'm doing the bottom, if I'm going candle bodies to candle bodies, I'm actually getting this. Now, you can sometimes go from a wick to a candle body if you want to try to do that. if you're not getting anything, or you're like, oh man, I don't really want to do that one. They're both valid. But once you got that, especially if it's going horizontal like that, yeah, you know you got a channel idea going on. You just don't know where it's going to end so far until we get lower areas. We got these, and if it broke down below it and broke back in, oh crap, let's lower it, and then it broadened. So this is a reaccumulation right here. They do a little distribution and they reaccumulate down the bottoms, and then they take us back off. It's a sideways channel. It's a sideways rectangle. It's a bullish pattern. It's a continuation pattern. So whether you're looking at it as the channel, or if you're trying to just the channel, going by candle body, if you follow that guideline, you know, that would have been your most accurate way to do it, my personal opinion. They're both right though. If you're just following, okay, I'll go candle bodies here, and what are you getting? You're getting the bullish megaphone. Both of these are right. You could play them, and you can go from wicks to a body if you want to. So, I mean, you got options and different ways to play your trend lines and to get your ideas. And they're all valid. As long as you got 2 touches on one side, 3 on the other, like I said, you have a valid pattern. Even if it's different from your neighbors or the goo you're watching, you got a valid one. Now, this was a time when the gurus were saying head and shoulder forming here. But did you have a neckline? Not a solid one, especially not with candle bodies. I mean, this didn't really touch up there. So, I mean, I don't look at it that way. Besides, that gets into what we're talking about. This is a bottom reversal pattern. Why the hell are you price rising up into it and playing it as a continuation pattern? Not it. But the one that is the one that's on the outside of it. So if you always zoom to the outside of it and don't worry so much about what it's doing on the inside, you can look at it. Sure, we can come down the smaller time frame after we got our big thesis made there, what we're in, right? And we can look for things, and there's nothing wrong with doing that. Look, you might have an Adam and Eve type bottom here at support. You could look at that idea. Price came from the top and came down to it, right? So you find levels of support. We know we had one right here, horizontal level of support, and we can look for a bottom pattern there. That's fine, and it's a shaky one, but it does kind of, you know, you get that the pointy and then a little bit of a roundy. So you could look for things like that, but you're not saying, well, like I don't know, Adam and Eve, because when you zoom out, you already see what you're in. Now here's one. Well, if I can get over to it without sliding my screen. But I mean, you got this, and you've established horizontal points, and you can look at your wicks in these areas. When we're playing this over here, we know we found support here, so let's draw a little line. We'll call that the bottom that we got in this range. As we start playing, we lost it and gained it, and we're playing games and getting kind of stupid and silly, and I'm sure somebody saw this as a head and shoulder to the upside, and you could. Now I wouldn't, because I'm picky about my damn necklines. Now ironically, Thomas Bukowski's not as picky as I am, but I'm stubborn. I'm not going to, even with Thomas Bukowski, I'm not giving that up. I'm sticking with that because it's worked for me. But here you don't have a solid neckline to me, and if you tried to use this little tool over here, it agrees with me, by the way. This head and shoulders tool, it agrees with me, by the way, because if you don't establish a neckline, it ain't going to fill it out right for you. This thing ain't over here. This one ain't filling out. Why not? You ain't got a neckline. Well, I can cheat. What? Don't cheat. Look for a neckline. All it needed was a touch over here to make itself right, and it never got one. That's just me maybe I'm just being too picky. I mean, she got to break to the upside, but the problem is, if you wanted to play this, it could be a triple bottom too. It could be a triple. You can get into semantics here, okay, on some of this stuff. What you really have going on, you got a lower low and then you got a higher low. That's a good sign. That's what we want to see. We always want to see for a higher low. If we ever start getting lower lows, when we start getting this one's higher than that one, we might have hope. We might have hope. We might have something. We might have a trend line that we can follow to the upside. That's what you need to see. You might have a trend line you can follow to the upside, and they can save your ass whenever you break it for real, like here at the top. That's what plays. That's what plays. Whereas if you were just sitting there, I'm gonna play the inverted head and shoulders, and never, if you took the straight measure move and never actually reached it, did it? However, now this is the way I would be doing it. I'd be following this guy as best I could. And now my measure move wouldn't be quite as deep. It might be a little shallow. It still may not hit. But I'm also going to throw this other idea for you out here for you. The trend line measure move. Your secondary. Put that there. That's still went above it. Just throwing some ideas out there, and still this one, it did not hit ever. So those ideas you got, measure moves, sometimes they won't work, sometimes they won't. Some people see this as a symmetrical triangle. I would too. And I hate those little bastards. I always say they do the rabbit run. They go on one side and then they break down to the downside, and this one did not disappoint at all, did it? Don't lock symmetrical triangle shapes, the fat, pudgy little things like that. And sometimes that's a favorite thing for people to draw. Look, we're in a symmetrical triangle. Yeah, they suck. I don't play them. Don't mess with them. I'm just telling you, don't mess with them. Here's what I would like. Here's what I actually see. If you're following trend lines, this would be the first thing that you would have seen, right? You would have been establishing your top trend line. As she plays out, we automatically just extend them on, and it respected it, and it broke out and then flipped it. Those support resistant flip trend lines, best ones ever. I mean, and that's your strongest one. That's the ones you need to really be seeking out instead of trying to go shoulder, head and shoulder, or this is the flag to the upside. Find these guys. Find these guys, because if there's a pattern, it's just going to have the strongest point of it. And look at this idea. Once you find those, you got an angle, baby. You got an angle. Bet you it gets respected over here. Look at this. Wait, have we got something else over here? There's some respect on that. I may not have it drawn as perfectly. We can tighten her up. But overall, that angle, still going to be respected. Look at this one. Support resistance flip again. Right there with that angle. And I love to show this because the angles, finding that, man, that was a game changer for me. When oh, really? It's repeatable, right? They slowly change. They slowly drift. It's like a mesh green, and there's, it can warp a little bit over time as these things go out. But especially when they're in like a consolidation or something, man, those angles can help you out so much. And even the bigger roll angles. So we're supposed to be getting into the patterns, and I feel like I'm really wanting to try to focus on the triangles, because when you zoom out, that's really what you got. Situation like this where you got things that are going up, and when you start playing them out, you get something like this, and then it evolves. If you start including and tightening up your angles, they can evolve a little bit as it plays out. And then, oh, look, there's a channel. It starts showing up. But I always like to keep in mind what we start out with. Now, you may not ever see that, but that trend line does. It's got some importance. So if you start seeing them where they're going up like that, you're in a rising kind of pattern, in a rising channel of some sort. But they usually break to the downside. We don't like when you get a price up and then we do something like that. It usually does break down, and then we kind of start in some kind of a range thing. If you got too much noise, you can zoom out, and that's where the candle bodies will start helping you. Starting looking too noisy, zoom out. Go to a bigger time frame. You're going to be more accurate on a bigger time frame anyway. Zoom out to the 12-hour, probably looks a lot more easier, right? And you can see these trend lines, and then it was just wicks. All it is wicks. But those trend lines, knows how it's just keep spin resistance. Now my angle's not all that great here. You can probably dial it in, but we're just going to kind of look at these ideas. And I like to do this. This goes back to the trend lines. Ooh, look right here on the wick, candle body. And there, wicked out of here. We might lose it. If we do lose it, we can take this to the. These are some ideas you can do with trend lines. It's got kind of forecasting the channels. But once you understand the channel idea, you can use them to forecast a little bit. All right, so I'm getting back on channels, not going over any interesting, cool patterns. There's all kinds of patterns that we can look, but I'm telling you, they will all fit within some kind of triangle or some kind of channel every time. If you just zoom out and look, you'll find them. However you want to do it. This sucks. I don't like this at all. And for the people, look, it's making a big old flag to the upside, and you get the crazy ass measure move. Look, the flag to the upside. We could be here next week about 150,000. Well, what they miss sometimes, it might be. Don't forget your trend lines, darling. Don't forget your trend lines. A lot of times they're calling this stuff and it's already broken a trend line. And their little flaggies played out past the trend line, and actually it just went past the point of no return to where we're going to come down. But that's why sometimes those flag calls aren't working out. They broke a trend line. They broke the trend line. They formed outside the main trend line. Now, if they form within the trend line, here, maybe I can draw it out a little bit better. Then I get price action, and she does her little flag, right? But we're following a trend line, following this one, and well, that sucks. Okay, but they can mature. But let's say the price action, you had something down here, right? Previous price action. That's what you need to pay attention to. I wish I could draw this better. But let's say this is our main trend line here that we're tracking. If that breaks, and Mr. Happy is looking for some kind of flag, or you'll see this a lot. To the upside. I hate this. I despise this. This is like one of the worst plays ever. To the upside. Remember, you broke a trend line. What usually happens that we've seen in our examples? A lot of times you come down after that. You might in a bullish market, you might actually see it go up a little bit, make another top, either higher or lower, and then drop. And they say, oh man, the market makers came and they put it back into the pattern and drove us to the downside. Well, you lost your pattern over here, mister. This was just a bearish retest. It's called a bearish retest when you test the underside of that, even if it's a higher high. And this is where you get your M tops, right? This is where you get your M tops a lot of times there. Or even a head and shoulder could form after that. But my thing is, if you got a flag, any kind of flag to the upside, and you've broken your main trend line, that's probably not going to play out the way you want it to. Probably not. Also, I see a lot of this. I see this as a common mistake. You're in a channel. You got your channel ideas that you've been on, and then they're saying they're coming up here and they're drawing the little flag to the upside. And they're not zooming out. The reason it doesn't work out for them, maybe sometimes it does, and that's good. It wouldn't be, but you're at resistance, and they don't see that. The little on the small time frame. If you're chasing the small time frames and zooming in and just trying to pinch the tips and not zooming out and looking at the bigger idea, you're going to miss that. And I see them do it all the time. I do. I see them do it all the time. Like, I call it out all the time. And I'm like, not to be mean, but as a teaching tool. If you had a channel and you came up to the top of that trend line and you're making your flag there, it might not work out. And especially if it's within the, you got another trend line and they're still calling, look, it's just a bigger channel right here to the upside because they got the big ass measure move. So I know you guys have to see this stuff sometimes, but you lost it. In reality, we should be coming down somewhere. So those are some ideas with patterns. Is this stuff kind of making sense? But when it does come to pattern, man, there are so many. But I'm telling you, every one that you look at will fall within a channel or a triangle. They're all based on we got a visual. Let's go to the visual index. He doesn't have the prettiest pictures of patterns, but you got diamonds, channels. They will fit into a channel. It will. diagonal or even horizontal, you'll find they'll all fit into a channel or a triangle. They just will. All these different shapes that you could be looking for. These are interesting. The scallops, the curves, the scallops, and the rounding bottoms, the rounding tops. Both are cool to go into. We'll get into those a little later. We've touched on it a little bit. But your ascending triangles, descending triangles, all that. So I think if you just kind of zoom out and apply your basic shapes, is what I used to tell my little tattoo intern. Basic shapes, my friend, basic shapes. It all starts with basic shapes. We start with a circle and then we turn it into a face, a portrait. Let's start with a circle. That's an ugly circle. And then we whittle it down, right? We whittle it down. I can't do it on here, but we get our guidelines and we know how to set up our eyeballs, where our eyebrows go and where our nose goes and where our lips cut off the edges and where our ears go. Our jaw lines. And before you know, we add on some funky little hair. We'll make him a gray person. I think it's Andy Warhol. Oh, it's Trump. I think I've drawn President Trump. Let's draw the big pompadour. Should have kept the hair yellow. That's President Trump. Shot in the ear. Okay. So, basic shapes. Triangles, channels. That's all you need to know. And a little curvaceousness on a parabolic move. Biggest thing I want to drive home is to have a valid pattern. 2 touches on one side, 3 on the other. Let's go back to chats if there's any questions or anything. It is 9:14. Joe says, I thought everything was 68%. Cup and handle, 68% to the upside. Rise and wedge, 68% to the upside. Fall and wedge, 68% to the upside. Everything's also 68% to the downside. Exactly. That's what you're getting on some of these. Well, at least one. There is one that's really bad about it. But, honestly, I understand where he got it because he was in the same group that I went in, and our mentor did that. I started noticing, man, wait a minute, every pattern can't be 68% to the upside, can it? Wait a minute, now well, if it was 68% to the upside and it broke to the downside, but now you're saying it's 68% to the downside, something's wrong. I gotta find answers. And so when I stumbled on Bukowski and then saw that he actually put accurate percentages to these, and they're really, a lot of them are really similar, I'll give you that. Well, we gotta switch rooms. That was was that the right button? That's the wrong button. What was that? What did I do? Here we go. My triangle cheat sheet right here. Screenshot it. It's in the trading group. It's in the Telegram group. If you look at the files sections up there, and I think I even got it pinned up there. It's in the pinned comments up there. This little chart. Let me get rid of the chat thing so we can see there. All right, so you got your leveled off triangles with the bottoms. Where can we? Maybe I should come over here because I can't point on my screen to that thing. So you got these guys that have flat bottoms, right angled. They are called right angled patterns. That's what they do. And in this way, you would look at it as a. In this way, it's a megaphone, a right angle megaphone, right? This little guy has a 55% chance to break to the upside. It's a continuation pattern. They're all continuation patterns. Remember, they are continuation patterns. So price should be coming up to form the rod and wedge, baby. I love this one. We'll play this little guy. A lot of times it plays out. You're doing something here, you spike up and you play there, and then woo, you get a big bump up, and maybe you come back down, and then whoa, you get a big, you get those until you get one that's not as much, and then you kind of give it up. And then you got your descending triangle here. Now these little guys only have a 53% chance to break up. So, and now some of your gurus keep calling these triangles 50-50 patterns. I don't know where the hell that comes from. Now, they are called bilateral because, well, This one's ascending, and then we're on this half of it. That would be that lateral side. This would be the bottom lateral side for an ascending triangle. So you got that. Now, bilateral, and maybe they misinterpreted it as a 50 shot, but it's not really a 50-50 pattern. I mean, this one has a 63% chance. The opposite side of this one has a 63% chance to continue to the upside. This one only has a 53. So you can't say that, well, it's 50-50, it go either way. No, it's not. That's not it. So I don't know where the hell that information comes from. I've not seen that come from anywhere else. I've dug for it. So that's a regurgitation of some misinformation, in my personal opinion, that's being broadly broadcast out there. And you get that a lot on YouTube. You need a mentor. Is good. I hope that I can be a mentor to you guys. I hope that I can share my knowledge and experience with you guys and help you cut the corners, the misleading corners that you'll run into, because I ran into them, and try to point them out. But a good, solid, legendary trader in a style that resonates, where it's Elliott Wave. If you like Elliott Wave, go with Elliott Wave. You get into Fibonacci with all that stuff, right? WD Gann, oh man, what a rabbit hole to go down. But he goes over a lot of the good basic stuff too. You learn all your basic stuff from him too, with the good stuff. Thomas Bukowski, Wyckoff, you're Charles Dow. There's so many of the old ones that were dead from 50 to 100 years ago that made their fortunes in this market. Nothing's changed. Their analysis still works. It's like, oh no, man, they figured out how to work a system for this market, and they got really good information to share with you. So you want to rely on those solid proving statistics and techniques and things like that, things that work, rather than trying to get the new person trying to come in thinking they can shake it up and make their own way, and I'm going to make an ascending company handle. Well, this is, don't you think over the last 250 years the stock market has kind of been in existence? Oh, it goes back further than that. It goes to 1600s in Switzerland. That everybody's come, I'm going to try to make everything has been tried. Everything's been tried. It's only what remains true that really counts, right? What's lasted. And that's what you can pick up from the legends, from the greats, and their insight on how the market moves and stuff. And if you'll start looking at them, I think it'll open up your eyes. It'll open up your eyes for a lot of stuff. I love the old legends and reading comments and things about it. All right, so we got the percentages over there. I think you see that the falling wedge is 68%. That one actually is true. However, if it's the mega pony pattern, pointing down where price is going down, that's got 72% chance that one will break to the upside. Pretty cool. They're just as fun to play as them little falling wedges right there. Love them. Anything that's trading down will flip bullish. It's a bullish pattern, whatever it is. Everything that's moving to the upside, especially if you see volume trailing off, that sucker's probably getting ready to drop. So there are just some ideas. Hopefully we covered some basic grounds on patterns, and we can start next week probably getting into maybe a few others, or maybe take it to a different area. I don't know, just depending on what you guys think. You guys want to stay on pattern trade for a little bit, maybe go over some certain patterns and how they play it, but I kind of do that on my nightly stream, talking about them. I do. Or we could start getting into something like some indicators and some indicator strategies to use along with our price action to tell us, hey man, could be our trigger to help us know when to enter trade. We need to start getting on enter trading, I think, on the next stream. Maybe applying these concepts to a pattern or a trade setup on how to actually properly, or some proper ideas on how to enter. There's several different, all kinds of ways to enter. You can just degen enter if you want to, but ways to enter that we can kind of mitigate a risk a little bit. Some smart ways to enter. We can go over that. And triggers. A trigger. You need a trigger. Something that tells you, hey man, go ahead. Something that gives you the okay, the green light to enter a trade. You have to have a trigger, and I don't think that's really talked about as much. So my trigger is usually a breakout or recovering a 9-moving average, or bouncing off of the bottom of a trend line. Sometimes that can be a trigger for me, although that's a little, a lot of times it works, but sometimes it doesn't. So, all right, guys. No mistakes, just happy accidents. There we go. Happy trend lines. Happy double tops. Happy double bottoms. Is Bitcoin in a falling wedge? Is Bitcoin in a falling? Are we on Bitcoin right now? Whoops. I think Bitcoin is in just a accumulation over here. No, that's not a falling wedge. Some people with Bitcoin right now, and it could be, it's really, you're in a channel, man. We kind of established that with that high over here that's really close, I believe. So I think if we come over here and look at the candle bodies and just draw a horizontal line there straight, we can kind of identify a channel idea that we're trading in right there. See that? And I didn't even go to the bodies there. If I just take it to that first body, we wick through it. This one wick down to it, wick down to it, wick down to it, wick through it a little bit, wick through it a little bit, wick through it a lot more, wick through it just a little bit. But that's basically what we're doing. We're doing a channel for Bitcoin. Now, a lot of people are looking at this as, look, that's an M pattern. It could be. It's not confirmed until we break below the little peak there. And we didn't do that, so that's invalid. We're channeling right now. We're in the channel. For real, for real. Now, can't you break to the downside of the channel? That can always happen. But what we did, we made a higher high after making a lower low. Then we made a higher low. What we need is a higher high. That's what we're looking for. So I'm actually looking for price to recover up to about $110,000. But only if we figure out what the hell we're doing over here. Right now with Bitcoin, we're in danger of coming back down for a little bit of a retest. That might happen. You remember that there's this one little bottom I like that has like it's got a little inverse scallop, and then she takes off. I need to go find that over in Bukowski again too. I call it like the Roman bridge thing because that's what it reminds me of. Those little Roman bridges that have the water coming through. And they just look like a bunch of those little guys. Little bridges with the water. But now these usually these usually can come back to a 786 retracement. So we might see somewhere, we might test 93 again over the next few days. Maybe, I don't know. I guess I need to turn my indicators back on here too. Now indicators are helpful. It does look like on the 12 hour that we might be coming back down to about 90 with the 200 moving average, and we'll probably just glance off of it. Really, anything other than that's going to be bearish as F. But our moving averages suggest that we should keep going on. They look pretty good. They're actually all in sequential order. It's actually strong on the bigger time frames, according to some of the indicators. Some of them don't. And the altcoins, they're the poor little guys. Bitcoin dumps, altcoins going to dump too. Then that sucks. We'll save this stuff for the nightly show. Guys, I hope you enjoyed class. And I know we kind of recapped some ideas, but I'm trying to do that to get some of these things solid. And I feel confident we're up to the pattern trading part now. And so I welcome any questions in the comments or the things if you got questions for it. Even in the group in the student chart areas, you can put some questions over there. That way I can think to bring them up on our next session, I guess. That way I can kind of tailor this to more toward what you guys are wanting to learn. But I do want to get some basic foundations out of the way, and I'm trying to. I hope I'm doing a good job of doing that. But I do like to also give you sources and resources that you can go and and compare what I say and Thomas Bukowski. And if you don't like him, I mean, also your Investopedia, Investopedia.com. Just do a Google search on it. Another great place to get an education over here. And I think, let me see how we navigate over here. Where are you at? They should have. They've got an educational center over here. Maybe we just search. I'm gonna type in education. Well, that didn't help me out. It's here. Give me a second. And I'm just a boomer. Simulator investing stocks, trading. Let's try trading. Well, this is not going. It's, I swear, Investopedia has a little teaching place over here. Let's just do a Google search. Falling wedge Investopedia. That's a good way to do it. Because I know there's an yeah, here we go. Descending triangle. What is it? What indicates? Now where are we at? Technical analysis. Let's go there. Now we're in the trade. Okay, it's under trading. It's under trading and then technical analysis. I don't see you there. Let me back up. Investopedia/technical analysis. Maybe I need to view all. Maybe that's what it is. They look so different. All right, so maybe it's not the easiest place. There, it is there. They do have. You just got to get into the right little section. But they will go over all this stuff. And additionally, now you got AI in your browsers available, like Leo's over here. And you can say what's the qualifications for Wise and Rich pattern and how to trade it. And AI should be able to help you with a lot of this stuff. You don't, I mean, I'm sorry to say, paid groups and things like that, other than just for community, for the people who know how to get their answers and know where to look. And it'll tell you all about it. A series of, I wish it'd give you a picture. Maybe some of them do, but you can also Google it and things like that. But it goes through some decent. A rise and wedge pattern is a bullish reversal pattern indicating a potential change in trend. Pattern can also be used as a continuation pattern, indicating a potential move higher in an existing trend, like really good higher. As with any chart pattern, rise and wedge is not foolproof and should be used in conjunction with other forms of analysis. That's an important point. When you couple these ideas, see what we're doing, we're taking these ideas like patterns, and we're coupling them with some other ideas like an indicator, maybe a moving average, maybe the RSI, to help us get a trigger and a trade idea. We're not just going by one thing. And that's where a lot of people get in trouble with when they're trading with indicators, like, oh, it's got a green dot, time to buy. You take things and you put them together with other pieces, and then we see if we get it. One says okay, one says no, not going to happen. Oh, okay, well maybe we need to look at this and let's look at this idea a little closer, make sure we're not screwing up. Okay, you're missing something. But if everything, we got a lot of them, our little indicators showing us, well, they are. This says you can probably do it good, and this one says, yeah, hey man, this one's actually got a buy signal. This one says, well, kind of, we're getting close. Yeah, we got some ideas, and then we have a trigger. We'll have our own rules for a trigger. For me, it's a 9-moving average, getting a candle open above it, especially on bigger time frames. To jump in, or that it's okay. You put together these ideas, but you don't use anything in isolation. You put them together. Guys, I need to run and get ready for the nightly stream where we can start looking over Bitcoin and the crypto altcoins. But thank you guys for being here, and hopefully this was educational. Avi Dana says, I love the way you teach. Sometimes I just feel like I'm rattling. It just clicks. I hope so. I hope I can... You guys are here probably because you resonate. We resonate in some way, but hopefully I can explain myself in a way that it does click and does resonate. So that's important. Thanks for the feedback. That helps me. I've learned a lot, and especially more than you do in those sensationalized streams. with all the big views. Oh, thank you for that. Thank you, Real Dog, for the knowledge and understanding of what true TA is that guru. Wait a minute. Thank you, Real Dog, for the knowledge and understanding of what true TA is. That guru got me wrecked several times. I've been trading with better accuracy since I started watching. Thank you. That means a lot to me. And I just think there's a lot of information that just gets skipped. It's sloppy. It gets sloppy. And you catch the real man. We take a measure move and we put it to wherever Bookmap has a target. Yeah, I don't understand. This is something when you take a measure move. There is no reason to move to change it. It's a measure, right? I'm going to measure this and it says 5 inches. Or this. I'm talking about a pen. Talking about a pen. It's a pen. 5 inches. I'm guesstimating. But I don't know. Somehow I stretch it out and then I take it over and it's like a foot long when I don't know. It's like, it's just weird. It's weird to me that you would take a measure and then you got to change the angle. There's some kind of OCD thing. Or change the angle and put it up to somewhere else. And I'm like, what the hell? How's that going to help you be accurate at a target? You're just guessing, or usually a lot of times they would already have a trend line up there, and so they have a measure move and they'll put it up to some sort of support resistance point. And that just tells me he has no confidence in his measure moves, or I don't know, some kind of. I don't know. I'm still trying to figure that dude out sometimes. Now, he does understand the concept of a one-to-one move, and that's what he's doing a lot of time. He's just taking that's where you're getting the longest things, but he's putting them at breakouts and applying it differently. But there is a concept of a one-to-one move in crypto. It's just, when you look at Thomas Bukowski, you don't always get the 100% of that move, right? That's why he has multipliers to apply and some things that can change it. But one of the best ways to predict future price places that we haven't been when we're price discovery that I found has been the Fibonacci. And I can't wait till we start getting into Fibonacci because I'm going to spill the beans on everything that I know about it. I don't know everything about it, but I know a lot more than I did 4 years ago, 3 years ago, 2 years ago even. And it makes a lot more sense to me now. And it's very mystical, and she can predict the future. I'm just saying. All right, guys, I'll see you tonight. Oh, I forgot to take my thing off the screen. Thanks for hanging out. Well, let's go to the end screen and I'll catch up with the comments here. End screenshot. Thank you for hanging out, guys. Got 10 of you guys still here.
Took all my savings, bet on fake moonshots. YouTube gurus, sharking that.
Glittery Marshmallow says, just popped in to give it a like, but look at the networking going on here. Love it, guys. Dreams coming true. Yeah, these things are good for you to watch whenever it's convenient for you. And hopefully we're taking things in a nice little step of gradually getting a little more advanced as we go, stream to stream. But getting feedback from you guys is really helpful. That helps a lot because you need tailored to you guys too. Thank you so much, guys. And also, Joe is an excellent mentor as well. Joe's been doing this for a while, been a minute. He's actually got trading group experience, been a mentor in the group that I paid for 4 years ago, 5 years, whenever it was. He was also part of that group, working with them and everything. Joe is great. Joe is great. Very, very solid explanations, very solid explanation of his mindset, what's going on, and very solid explanations on the things that you got to have, those fundamentals, the support and resistance that he loves so much. You have to have that. Joe's got lots of alpha. Did you make the cheat sheet? I made the one that I have, and I put it into it's in the Telegram group. I think it's pinned. Don't trip by the dip. Then you get clipped. Lols. All right, guys. I'll see ya in just a little bit. Thanks for hanging out. Give the delay a little time here. And click.